Good morning, traders, and welcome back to Today Daily Analysis for the 10th September 2024. Starting off with the US dollar index is rising ahead of Monday US trading sessions, boosted by the Fed officials' Waller comments and the mixed non-farm payrolls data. After breaking above 101.50, it's eyeing 101.90 for tests. Although the dollar gained early last week, it faced renewed selling pressure and the drop below 101 due to expectations of a potential Fed rate cuts at September 18th meeting, driven by concerns about the US economy. The key focus this week is the CPI inflation data report, which could influence the Fed's decisions. If bearish momentum continues, the dollar index may test to triple bottom support near 100.50 and possibly the critical 100 level. On the upside, resistance is expected at 101.52, with a break above targeting 101.92 and 102.45 through 4-day SMA. And for the crude oil prices, slightly rebounded on Monday after dropping below $67 on Friday, following the weaker than expected US job data. The US crude is now trading around $67.80 per barrel on Friday. The oil prices fall nearly 2% as concerns over the global demand outweighs the support from OPEC Plus dealing supplies increases. The US job data slower gains, but a lower unemployment rate of 4.2%, suggesting that the Fed Reserve may not need to cut interest rates sharply. The weak demand from China continues to weigh on the oil prices, which hits their lowest since April 2023. Despite a drop in the US oil inventories, the WTI crude oil fell 7.55% to $66.72 on Friday. Technically, the oil remains under pressure after breaking below the key levels, with support at 66.72 and $66.20. The next major support is at 63.64. Resistance is seen at $70 and the break above 71.50 could push prices to $73.66. And then last for the gold. Rebounded above $2,500 on Monday after briefly dipping below $2,490 earlier. However, the rising US Treasury yield and the stronger US dollar are capping the upside as traders await this week US CPI report to gauge the likelihood of a Fed rate cuts. Gold remains range-bound. The weak Chinese inflation data has sparked concerns about demand, but potential stimulus pressures from China are providing some support for the gold prices. Technically, as long as the gold stays above its 21-day moving average of $2,498 and holds the psychological level of 2,500, the outlook remains bullish. The next resistance is at 2,514.50, followed by 2,429.50 and the all-time high of 2,531.70. A break above could lead to $2,550. If the gold resistance faces resistance and falls below 2,498, the next support levels are at 2,472 and 2,463.70. And that is all for today's daily analysis. Thank you for watching and have a nice day.